continue with our lecture on redemption of preference shares, where we left it yesterday. Yesterday, we discussed theoretical framework, regulatory framework, legal issues. We discussed accounting entries also. And then we worked on first two sums, relatively simple sums to start off with. And we'll continue with few more sums today. Let's have a look at question number 3. X Limited has given the balances as of 31st March 2022. There is an equity share capital 2 lakhs rupees. These are 10 rupee share up, 10 rupee shares fully paid up. We have 1 lakh rupees of 8% redeemable preference share capital, which are 100 rupees shares. These are also fully paid up. 1000 shares are there. Then we have general reserve, credit balance in P&L account. There is an investment allowance reserve, which question says is also a free reserve, a part of free reserves. We have securities premium account. There is a bank balance, capital reserve, capital redemption reserve, which is the old one, maybe created in the past, and then revaluation reserve. So these are the reserves and other balances. It says that a company proposes to redeem preference shares at 10% premium. Minimum balance to be retained in general reserve is 20,000. Reserve should be used to the extent possible. Fresh issue of equity shares of 10 each for cash at par is made to the extent required. And then we'll pass the necessary entries in the books of the company based on these transactions. Just read the question once. I have a couple of questions for you. I'll ask you those questions and then we'll start. Just read the question once. Okay, my first question to you. Do we have fully paid redeemable preference shares or partly paid up redeemable preference shares? Yes, anyone?
Fully.
Yes,
Fully
sir,
paid? Fully paid. So that is one of the prime condition. If it is not a fully paid share, then we can't go ahead with redemption. Now, in this case, it is fully paid up, so we can go ahead with the redemption. Then it says that we have to use the reserves to the extent possible. So let's have a look at the reserves. The first is general reserve, 80,000, but we can use only 60,000 from that because the company says you have to retain a minimum balance of 20,000 in that particular reserve. So out of 80, if you want to retain the balance of 20, we can go up to 60,000 for utilization. Then P&L account credit balance is available. Investment allowance reserve is also free reserve, 5,000 we can use. Can we use security premium account?
Yes, sir.
No, sir.
Is it a free reserve? It's not a free reserve. We can't use securities premium. Can we use capital reserve?
No, sir.
That is also not possible. What about old CRR? Can it be used?
Okay, sir.
Can we use old CRR?
Yes.
Yes, sir.
No, we cannot use that also. It's the old CRR created for a purpose at that time. See, you must have had either buyback of shares or redemption of preference shares in the past. So that time that CRR must have been created. Otherwise, you won't create CRR. So it must have been for a specific purpose. Having said that, how can you use CRR? Only one purpose, and that is issue of fully paid bonus shares, nothing else. So that means even CRR is not available for our requirements. You can issue bonus shares, that is fine. What about revaluation reserve? Can we use?
No, sir.
No.
No, we cannot use revaluation reserve. Okay, so what I'll do is I'll just add 2 columns here. Okay, now we need 1 lakh rupees for payment of shareholders, preference shareholders, and we need 10% premium. So in all, we are going to pay 110,000. So if we have 110,000 reserves, then you can do it fully out of reserves, fully out of divisible profits. But if your profits are not sufficient, divisible profits are not good enough, then you will have to go for fresh issue. And company says fresh issue can be made to the extent required. So you may have to eventually come to the combination partly out of fresh issue and partly out of divisible profits. So let's find out how much we can use. I'll just run through the numbers. We can use 60,000 of general reserve, right? 20,000 we have to retain. Add another 20,000 from P&L account. So 60 plus 20, it becomes 80.
80,000.
Invest, yeah. Then we can add investment allowance reserve also 5,000. That is also possible. So 85,000. Securities premium we can't. Capital reserve we can't. And then CRR and revaluation reserve we can't. So that means effectively you can use reserves to the extent of only 85,000. The source will be general reserve 60, P&L 20, and 5,000 of investment allowance reserve. Out of this, we can use up to 85. But we need 110. So that difference, 85 and 110, will be by fresh issue of shares. Are you clear with my explanation? Yes? Have you understood what I tried to say? Yes or no? Hello?
Yes,
Yes,
sir.
sir.
Okay, so let's make a working note. Utilization of reserves. So how we are going to utilize that we will plan out. This is only for your reference so that you have a note as to what we can use and what we cannot use. So I'm putting the columns, amount which can be used, amount which is not available, okay, and total amount. So let me copy the actual numbers first. So these are the actual numbers. Now out of general reserve, we can use 60,000. We can use P&L account 20. We can use this full 5,000. And out of general reserve, we have to retain 20. So that is not available. Okay, so this portion we cannot use for our purpose. Then security premium we can't use. Capital reserve we can't use. CRR is not available. This also is not available. So all that will go into unutilized portion, which we cannot use for this purpose. So what is the total of available reserves? It's 85,000 and the balance will be not available. Have you understood this compilation? Yes or no?
Yes, sir.
Okay. Now coming back to the original question, we have 1 lakh rupees. So out of 1 lakh plus 10% premium, we have to pay 110,000 rupees in all. So we will use this 85,000 for CRR and for redemption premium. Okay, so we will use redemption premium 10,000 out of this. We can use any of these reserves. That's not a problem. All of them are free reserves, and 75,000 for CRR. Sorry, 75,000 for CRR. So that means we need fresh issue to the extent of 25,000. So this will total up to 110,000. That's what we need.
Sir, can you please explain this process once again?
Which part?
for CRR.
No, the first part of the table or second part of the table, lower part of the table.
Yes, sir, lower part.
Okay. See, for CRR, okay, we have for CRR as well as redemption premium, we have total 85,000 balance available out of reserves. Have you understood this part?
Yes, sir.
Okay. Now 85,000, how we are going to distribute? Out of that, we need 10,000 for premium. So I will allocate 10,000 for premium. It may come from general reserve, it may come from P&L account, credit balance, wherever. But 10,000 I need for redemption premium. Then I will have 75,000 for CRR. Out of 85, if I use 10 for premium, I'll get 75,000 for CRR, right? Now my total redemption is 1 lakh rupees of face value. 1 lakh rupees of face value of preference shares are getting redeemed. Out of that, I'm creating a CRR of 75. So what is the balance left? 25,000. That will be my fresh issue of equity. As given in the question, we can issue equity shares of 10 each to the extent required. So my fresh issue will be of equity shares. Each. That's how we are going to complete the workings. Is that clear to everyone? Yes. Have you understood the working?
Yes, sir.
Okay.
Yes,
All
sir.
of you, yeah, all of you write down now the working. Okay, I'll give you a couple of minutes for that, and then we'll start with the entries. Write down the working. Once you are through with that, please let me know. I'll wait for a minute. Can we start with the accounting entries?
Yes, sir.
Okay. So accounting entries, again, we will have one set of entries for fresh issue. We'll be issuing share capital of 25,000. These are 10 rupee shares. So 2,500 equity shares of 10 each for cash. These are being issued at par. So we will do that part first. Then we can go ahead with the redemption. We can create CRR. We can provide for premium, and then we can eventually make the payment to the shareholders. So first we'll start with the fresh issue. My first entry will be bank account debit to equity share application money account. The amount is 25,000. Bank account debit to equity share application money account. We are issuing 2,500 shares of 10 each for cash. Then there is an allotment of these shares. So my next entry will be equity share application money account debit. To equity share capital account. Bank account debit to equity share application money, and then equity share application money account debit to equity share capital. So we completed fresh issue of shares. Have you completed both the entries?
Yes, sir.
Okay. Now we'll go to the next part. We have to provide for redemption, right? So we have 1,008% redeemable preference shares. So this account will be debited. Eight percent redeemable preference share capital account debit 1 lakh. Premium on redemption debit 10,000. To preference shareholders account, total amount payable is 110,000. So we are supposed to pay total amount 110,000, that comprises of capital of 1 lakh and redemption premium of 10,000. Now we have to comply with the law. So we will provide for this redemption premium and will also create a CRR. And which are the reserves which are going to use? That pattern of utilization is here. These are the 3 reserves which you will be using. Okay, so I'll just copy these reserves. So general reserve 60, P&L account 20, and investment allowance reserve 5. These are the reserves utilized. Out of that 10,000, we will set off the premium, and remaining 75,000 is your CRR. Have you understood both the entries?
Yes, sir.
Okay. What about others? Any difficulty in these entries?
No, sir.
Okay. Everybody completed also? So I'll pass the last entry now. We have complied with everything. Last entry will be preference shareholders account debit. To bank account. That is the payment to the preference shareholders. 110,000 payment. So once all the requirements are fulfilled, we can make the payment to the preference shareholders, which is to the extent of 110,000. Have you completed last entry also?
Yes, sir.
Okay, कोई doubt और कोई question, clarity required? Everybody has understood?
Yes, sir.
Okay. Some of you will have tough time, huh? People like Vaibhavi and all that. Class में बहुत बात करते हैं ना? क्या वैभवी, ये ऑनलाइन लेक्चर में बिल्कुल पॉसिबल ही नहीं है ना? अनम्यूट करके बात करना must be boring for people like you. Rida also for that matter. क्या रीडा? आपस में बहुत बातें होती है ना क्लास में?
I don't talk during lectures.
Sorry?
I don't talk during lectures, sir.
You don't talk during the lectures, is it?
No.
Okay. Let's see next time. We are going to have coming week physical lectures. Once the SY exams are over. Okay. I hope everybody has finished. Can we go to question number 4?
Yes, sir.
Okay, fine. Let's read question number 4. You are given balances by Y Limited. There are 2009% cumulative renewable preference shares of 100 each. These are fully called up 2 lakhs rupees. Then there is a amount of 1000 rupees, which is calls in arrears at the rate of 25 rupees per preference shares. Then you have securities premium account, general reserve, bank balance. It says there are arrears of preference dividend, which are not provided, which is 15,680. Company proposes to redeem preference shares at 10% premium. Fresh issue of 1,320 equity shares of 100 each for cash at par is made. So you have already made the fresh issue for this purpose. Balance you'll have to see if CRR is required to be created. And then you are given two different scenarios, case 1 and case 2. Case 1 says calls in arrears are realized from shareholders. And case 2 says calls in arrears are not realized from shareholders. I wanted to carefully read the question again, and then I'll come back to the discussion. I'll wait for a minute to read you to read the question, and then we will discuss. Can I ask a couple of questions? Are you through with reading of question? Yes?
Done, sir.
Okay. Now tell me something. Do we have fully paid preferential capital here?
Yes, sir.
We have fully paid, or is it fully
Yes.
called up?
Sorry, sir. It's fully called up. Yeah.
It's fully called up. It
Fully
is not
called up.
fully paid up because we have calls in arrears. Now, if we
Arrears.
have calls in arrears, can we go ahead with the redemption if these are not fully paid up preferences? Will that meet the condition of law?
No, sir.
No, it
No,
cannot.
sir.
It
No,
cannot
sir.
comply with the law, so we cannot go ahead with the redemption. So what are the options before us? One option is to collect the money from shareholders so that it will become fully paid. And if they don't pay, what is the other option? If they don't pay, then what will be the other option?
Forfeiture.
Right. So let's take the case 1 now. Case 1 says calls in arrears are realized from the shareholder. So that means before we start with redemption, you will receive the call money, that arrears amount of 1,000 rupees from the shareholders. And then all these shares will become fully paid up shares. So we will not have any issue as far as the redemption is concerned. Let me do the calculation for case 1 first, and then we will do the calculation for case 2. Now, redemption of 2,000 shares, case 1, it will become fully paid up. So amount payable will be 2 lakhs rupees, right? As given to us, it will be 2 lakhs rupees of capital that needs to be redeemed. These are fully paid up shares. So redemption amount will be 2 lakhs. Then we have premium of 10%. So that will be 20,000, right? And then we have fresh issue 1320 into 100. So these are the required numbers as of now. 2 lakhs will be redemption, 20,000 will be premium. So 2,20,000 we have to pay. And you are going to make a fresh issue of 1,320 equity shares of 100 each for cash at par. That will fetch you 1,32,000. So that means we will definitely require a CRR because you are going to redeem preference share capital of 2 lakhs, but you are going to make a fresh issue of 1,32,000. So difference between these two will be your CRR. A minus C will give you the amount of CRR, which is 68,000. Correct? Now this 68,000, where can we use it from? We have 1,68,000 general reserve. So this 68,000 can safely come from general reserve. Then we need 20,000 for premium. That 20,000 also can come from general reserve because we have enough balance there. In fact, that is the only reserve which is available to us. So we can draw 20,000 from general reserve. Have you understood these things?
Yes,
or
sir.
no? Okay. And we also need to pay this dividend, arrears of dividend, which are not provided because you are going to redeem the preference shares and these are cumulative preference shares. So they are eligible to receive this dividend. So we'll have to even make the payment of this dividend of 15,680. This dividend also will have to make a provision from general reserve only. Okay. So I'll add that one more item there. GR used for dividend, the amount is going to be 15,680. Okay, so this is the utilization pattern. Our redemption of preference share capital will amount to 2 lakhs at face value plus 20,000 premium. And we are making 1,320 shares as fresh issue. That will fetch you 1,32,000. So difference between these two, 68,000 is part of your CRR. That will be drawn from GR. We will provide another 20,000 from GR towards the premium. And we'll also provide 15,680 again from GR towards the payment of these dividends. Okay, have you understood the calculations here? Yes or no?
Yes,
Yes,
sir.
sir.
Okay, now let's have a look at case 2 because the numbers will change. Okay, now case 2, we are saying that calls in arrears are not realized from shareholders. So some of you have said that we will go for forfeiture. Of course, we'll have to go for forfeiture. Now, how many shares will be forfeited? Can somebody make a guess? What will be the number of shares to be forfeited? We have 2,000 shares as of now, which are fully called up. Out of that, there are some shares where amount is outstanding. So we have to find out the number of shares which will require forfeiture. So how many shares do we forfeit? How do we calculate that? Anyone?
25,000.
35,000. आपके पास 2,000 शेयर है सिर्फ रिडीम करने के लिए. आप 35,000 शेयर्स का 35,000 shares कहां से लाए आप forfeiture के लिए? I am asking how many shares will be forfeited? कितने शेयर आप कैंसिल करोगे?
40 shares. 40.
40 shares is the correct answer. 40 shares is the correct answer. Who is that? Who is saying 40
Kushali.
shares? Who?
Kushali.
Kushali. Okay. Yeah. 40 is the correct answer. I'll tell you how. How much is the amount of arrears? It's given in the question. 1,000. Per share outstanding amount कितना है वो ब्रैकेट में दिया है. कितना है?
25.
25. So 1,000 divided by 25 कितना आता है?
40.
40. So 40 shares जो है उतने ही शेयर्स हमें कैंसिल करने हैं. Yes or no?
Yes, sir.
40 शेयर्स हमें कैंसिल करने हैं. सो हमारे पास 2000 शेयर्स है. आउट ऑफ दैट वी विल कैंसिल 40 शेयर्स. हाउ मेनी आर लेफ्ट? 2000 minus 40. How much it comes to?
1060.
1000.
960.
960, right? 1960, right? So इसका फेस वैल्यू होगा 100 रुपीज. सो 1960 into 100 रुपीज होता है 1,96,000. करेक्ट? Yes or no?
Yes, sir.
Okay.
Yes,
So
sir.
yes. So that means against 2 lakhs, now we will have only 1,96,000 for redemption. Only 1,96,000 will be redeemed. These are 1960 shares. 40 shares are getting cancelled. Then we are left with 1960 shares. Each share is valued at 100 rupees face value. So 1,96,000. How much will be the premium on this? 10%. So premium is 19,600. Fresh issue remains the same, 1,32,000. So what will be the CRR required now? CRR amount will change. 1,96,000 minus 132. So CRR will reduce to 64,000. So you will use 64,000 from GR for CRR. You will use 19,600 as redemption premium, and dividend will remain the same. Dividend is given, which we have to pay. So that would not change. That will still remain 15,680, which will which will use from the general reserve itself. Okay, so these are the calculations for case 2 as compared to case 1. Now you can see there is a change in the calculation because the number of shares under redemption are different. Okay, if you want, you can add here one item, number of shares redeemed. Here it is 2000 and here it is 1960. Are you with me on the calculation part? कोई difficulty है किसी को? If you have any difficulty, please tell me. I'll
No.
clarify it again. Everybody has followed? Yes? Okay.
Yes, sir.
So please write down now this working. Have you already written or not? नहीं ना, लिखा नहीं है ना अभी तक? I hope you are
नहीं.
paying attention to the discussion. Okay, I'll wait for a couple of minutes. Please complete the note. Case 1, case 2. Then we will do the journal entries including bank accounts. For case 1, then followed by case 2.
We are done, sir.
Okay, fine. So let's move on.
So
Just
wait.
1 second. Yeah, okay, ठीक है, I'll wait for a couple of minutes.
Done, sir.
Okay. Fine. Now we will pass separate entries first for case 1 and then for case 2. Now case 1, what are the possibilities that we have to look into when we pass the entries? First, we have to see that this final amount of calls in arrears is received. Number 1. So we'll be passing the entry for collection of that amount. Then we will pass the entry for fresh issue of shares. Then we'll have to make the provision for dividend and pay off that dividend also, because there is some arrears of 15,680 that has to be paid for. Then we will go for redemption. Then we will create CRR, we'll provide for a premium, etc. as we have planned. And then we will make the payment to the shareholders. So this is going to be the broad sequence of entries. So can we start with case 1 entries?
Yes, sir.
Okay. So firstly, fresh issue. Actually, I can copy those entries. This is the advantage of using Excel. Bank account debit to equity share application money account, and equity share application money account debit to equity share capital account. The amount of fresh issue is 1,32,000. So fresh issue of 1,320 equity shares of 100 each for cash at par. Bank account debit to equity share application money account, and equity share application money account debit to equity share capital account. So fresh issue is taken care of. Can I go to the third entry?
Yes, sir.
Okay. Now we'll have to make a provision for this premium. Before we go ahead with redemption, we'll have to make the payment of premium. So my next entry will be not premium, sorry, dividend. So my next entry will be general reserve account debit to dividend payable on preferences. That amount is 15,680. And this has to be paid immediately. So dividend payable account debit to bank account. So we made the fresh issue. Then we provided for the dividend out of general reserve because dividend was to be paid. It was in arrears, and then we paid off the dividend. Any difficulty with any of the entries so far?
No, sir.
Okay. Now we can plan for the redemption. So what is the type of share capital we have? We have 2009% cumulative preference shares. Okay. 9% cumulative preference share capital account debit, 2 lakhs. Premium is 20,000 and total amount payable is 2,20,000. Cumulative preference share capital account debit, premium on redemption account debit to preference shareholders account. What will be the next entry? Can somebody tell me? Yes, anybody? What should be the next entry now?
Payment.
Payment. We can make payment directly or in between we have to do something.
CRR.
Yes, CRR karna hai. Premium on redemption we have to provide. So my next entry will be general reserve account debit to premium on redemption account to capital redemption reserve. So we are making a payment of premium 20,000. We are creating a CRR of how much for first working? 68,000 is CRR. GR we are going to use. So GR will be debited for 88,000. So GR account debit to capital to premium on redemption account to capital redemption reserve account 68,000. So CRR is created and premium is also provided. Now we can pay the preference shareholders. So next entry will be preference shareholders account debit to bank account. So payment will be 2,20,000. Preference shareholders account debit to bank account 220,000 rupees.
So,
Yes.
hello. So, I think we have missed out one entry, that 1,000 entry. We didn't receive the money from the shareholders.
Yes,
The
yes,
amount
yes,
that was
yes,
arrears.
yes, 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 yes. I agree with you. We have received these calls in areas now. Yes, we have missed that entry. Who is this?
Anand.
Anand. Yeah, we missed out that entry. You're right. We should have passed the entry for that 1,000 rupees. We'll pass that entry. Thanks for correction. We'll have to insert it at the beginning only. We discussed it, but then we forgot to pass. Bank account debit to calls in arrears account. Bank account debit to calls in arrears account. 1,000 rupees was the amount of arrears that we have already collected. So bank account debit to calls in arrears account. Done. Can we go for case 2 now? Yes or no?
Yes, sir.
Have you completed? Yeah, 1 second. I'll start with case 2. Okay. Now case 2, we will not receive these arrears. Instead of that, we will have forfeiture of these shares. So let us do that forfeiture part first. How we are going to do that, I'll explain and then we'll write those entries. We are going to cancel the share capital, preference share capital to the extent of this 40 shares. So we'll be debiting 9% cumulative preference share capital account. We'll be canceling the amount of arrears, and whatever is received, we will credit to forfeited shares account. So 9% cumulative preference share capital account debit to calls in arrears account to forfeited shares account. We are going to forfeit 40 shares into 100 is the amount called up on those shares. So my preference share capital will be debited for 4,000 rupees. I have 1,000 rupees in call scenarios that I'm going to cancel. And I have received 3,000 rupees, which we are not going to refund. That will go to a separate account called as forfeited shares account. So when you pass the entry for cancellation of these shares, it will be 9% cumulative preference share capital account debit to calls in arrears account 1,000. Those calls in arrears of 1,000 rupees will be cancelled to forfeited shares account 3,000 rupees. Did you follow this entry? Yes.
Yes, sir.
Any difficult? Okay. Now this forfeited shares account here 3,000 is actually a capital profit. So that should go to capital reserve account. So we'll pass one more entry, and that will be forfeited shares account debit to capital reserve account. This profit of 3,000 will be transferred to capital reserve account. So we have taken care of forfeiture. Any difficulty with forfeiture entries? Yes, cancellation,
No.
forfeiture. Everybody has followed these two entries.
Yes, sir.
Okay, now it will be more or less same like what we did earlier, except the numbers will change. Okay, here we received that amount, and in second case we did not receive that amount, so we had to cancel those shares. Okay, now the next two entries for fresh issue will remain same, and even payment of dividend related entries will remain same. These entries are going to be exactly the same. I'll just copy paste that entry. Fresh issue. Fresh issue is also same amount. If you see the workings, it's 1,32,000 only. So my entry will be bank account debit to equity share application money account. Then equity share application money account debit to equity share capital account. And even the amount of dividend that we have paid remains the same. There is no change in that. So that entry will also remain the same. So these four entries are unchanged. Fresh issue as well as payment of dividend. All of you write down these four entries, then we will go for the remaining entries. Can I go to the next entry?
No, sir.
I'll wait for a couple of minutes, then we will start. Finish these entries.
Sir, I have doubt in amount of forfeited shares. 3,000.
What is the doubt?
Sir, 3,000.
It's a balancing figure, na? You can take it as a balancing figure. You can calculate also.
Okay, sir.
See, 40 shares of 100 each. Okay. On those 40 shares, you have not received 25 rupees per share. So that means you have received 75 per share. Correct? So 40 into 75 also you can calculate. Check how much it comes to 40 into 75. 100 rupees वाला share है, 25 rupees pay नहीं किया है, 75 rupees pay किया है. So whatever is received, whatever is paid is balance transferred to forfeited shares account, which is balancing figure of 3,000. You can cross verify 40 shares at 75 per share. Got it?
Yes, sir. Thank you, sir.
Okay, fine. Can we go to the next set of entries? All of you have finished? Yes?
Yes.
Okay. Now, remaining entries more or less will remain same, except that the numbers will change. So I'll copy the entries. Numbers are going to change everywhere. Okay. Now our share capital for redemption is 1,96,000. Our premium is 19,600. And amount payable to preference shareholders will be summation of these two. This is already there in our calculation. I'm just taking the numbers from there. 1,96,000 and 19,600. You can see here, these are the amounts that we had calculated. 1,96,000 and 19,600. Case 2, redemption of preference share capital. Okay, so those amounts will come here now. Then general reserve and premium, whatever we have done, that will also slightly change. We are going to create CRR of 64,000 in this case. This is the working for CRR. Then premium will remain same, 19,600. Sorry, एक सेकंड, ये 64 नहीं होगा, ये 64 होगा. CRR 64 होगा. और GR we have to debit for the total of these two. So general reserve account debit will be premium plus CRR. So we'll debit general reserve to the extent of 83,600. Out of that, 19,600 is for premium and 64,000 is for CRR. Any difficulty in this entry and the numbers?
No, sir.
Okay, and now the final entry for payment. We have to make 2,15,600 payment, total payment to the shareholders. So preference shareholders account debit to bank, 2,15,600. That is a payment made, which is different than case 1, because here we have lesser number of shares which are forfeited as compared to first case. Everybody has completed up to this?
No, sir.
Okay. Finish it off, then we'll see what needs to be done next.
Done, sir.
Yeah. Any other difficulty in this question? Everybody has followed both the questions, what we did today? Okay. Question number 5. I'll just discuss this question and I'm going to ask you to make some try on this. Okay. You have 10,000 equity shares of 100 each. 10 lakhs is a paid up equity capital. 5,000 preference shares of 100 each. 5 lakhs paid up preference share capital. We have capital reserve, GR, P&L account, and then the rest of the items. It says that the preference share redemption is due on 1st April. 10% premium is the amount payable. Fresh issue of 2,000 equity shares of 100 each for cash is made for redemption. Bank loan is available. It was taken for shortfall in funds. Okay. And then we are going to pass the necessary entries and we'll prepare the balance sheet also. Can you calculate utilization of CRR, etc. in this? Will it be possible? Can you try that part?
Okay, sir.
Back home? Will you try? CRR, how to calculate and those things, pattern of utilization, will you try that? Yes or no? I want you to make an attempt at least. Okay. I want you to calculate CRR. I want you to see how the reserves will be utilized, which reserve we can use and all that. I want you to try that. And also the entries. I think entries are pretty simple. We have fresh issue of 2,000 shares, so that should not be a problem. Then we have redemption of preferences at 10% premium. You'll have to see whether CRR is required. If so, you can go ahead with CRR also. And then bank loan of 350,000 was taken for shortfall. So I think the entries are fairly simple. Will you try this? Yes or no? Hello?
Yes, sir.
Okay.
Yes, sir.
Okay. Yeah. So try this. Okay. And next time when we meet, we'll discuss the solution. Okay. Let me close the recording. Then couple of other things. If we want to discuss, we'll discuss that. Just a minute. I'll stop the recording.